Alright, hello everyone, and welcome back to Daily Update my 1000 Days Challenge. This is day number 14, so let's get things started. Alright, so today a very quick run through update itself. We did see a red, let's starting off from the S&P 500 first. We did see a red bearish candlestick, and we've actually pulled back from a key resistance here, and over here. So definitely this was somewhat like I expected. So if you do look in terms of that wise, I do think we are likely to consolidate over here. First time, second time is definitely clear signs of rejection. Third time wise, you can see a rejection is relatively weak. So I do hope that we can actually consolidate over here itself. There will be a healthy consolidation for potential third wave, which should potentially be very strong. Alternatively, if this is a first wave kind of a diagonal kind of formation itself, we could have a stronger kind of pullback and then push up towards the upside. So overall, I do see is that this is the first major wave, this is the second wave, this is the first sub-wave of the third wave itself. So this wave itself will also retrace upon here. So looking in terms of that itself, where I would see a healthy retracement level will be potentially towards here, towards the 0.382 or 0.5 Fibonacci retracement level. So in aligned to that, I do think that we could retrace, pull back, or consolidate over here, and this will give a very healthy sign of consolidation period itself. All right, and then moving along in terms of say Nasdaq-wise, we similarly see a clear rejection of this 200 simple moving average at that. So similarly, this was quite a parabolic jump itself, with a very weak retracement along the way. So similarly, this is signs of rejection itself. I do think that consolidating over here is actually a very good sign, and then this could be a first pullback. If this is barely, I would consider even the first wave itself, but it's a little bit more choppy, so I wouldn't consider this as a first wave. But this itself, if you look at the separate itself, it's a very clear kind of one wave, one kind of formation itself. So retracement towards to retest this 20 exponential moving average on the daily chart itself would be a healthy sign, provided we consolidate above it and actually push towards the upside for a very strong third wave itself. All right. Otherwise, if you look into ASHRY, very clear signs of rejection over here. I mentioned it's very unlikely we can go through that parabolically and still remain strength. So consolidation over here will actually be the most ideal case. Or less ideally, we could even have a very healthy pullback, even towards slightly below here to even retest this $29 mark to show signs of strength before we actually push towards the upside. So because this is potentially a completion of the fifth wave kind of Elliott wave formation itself, even the retracement to here, which is 0.382 Fibonacci retracement level, we consider extremely bullish sign. And if it actually does find support over 0.236, then that will be extremely bullish sign itself. So over to the $29 bar will be still regarded as a bullish sign itself. All right, and then moving along to KWAP itself, we also do see a nice potential fifth wave kind of confirmation of a completion of an Elliott wave itself, in which case if you look from the bottom all the way to the top, what we are seeing is the potential retracement to this level, which is 31.70, to even this level at $29 itself will similarly be a very healthy retracement sign itself, and that will give rise and opportunity for the long-term buyers to actually get in, or even for traders to get in on a confirmation basis itself. So in terms of traders, well, it really depends. Are you getting on the kind of a bargain side of things, or are you waiting for pullback over here and then a break towards the upside? Then there'll be more a clearer sign in that sense. All right, and then over in terms of Bitcoin wise, similarly, we did see like more towards the US market, we did see a very bearish sign. In fact, it's actually bearish engulfing signal all the way at the top of the resistance zone itself. So short term wise, I do think that we are more likely to prime for further pullback. But bear in mind, we have this 20 exponential average on the daily chart is catching up. And I do want price to actually stay near here while the moving average actually catches up itself. In which case, we see similar signs than what we are seeing over here on the 4-hour chart itself. We do find support on this 20 exponential moving average on the very first kind of bounce, and then I'll be very clear to enter long on the very following candle, stop loss right below the previous candlestick itself, and there will be a similar approach that I would do on the daily chart itself. So yeah, otherwise that's more or less about it for the 4-hour chart like I mentioned. I'm not looking to enter any trade right now, even though we are seeing signs of strength, simply because right now to me, the price action on the 4-hour chart has already transited to a more kind of sort of crisscrossing, or so the kind of price action isn't as clean cut, which is not something I like to trade when I'm looking for clear price action whenever I look for price action trade itself. All right, with that said, I've come to the end of today. If you guys have any questions, feel free to drop by your comments below, and I'll see you guys tomorrow. Take care.